Hey, welcome back. I want to share Redfin's latest housing market update that was actually just posted this morning, which is on September 5th. I have a lot to share in today's video, so I don't want to waste your time. Let's kind of dive in here. And I'm going to share some insights that is not mentioned in this article here. It says declining mortgage rates have pushed the median U.S. housing payment down to $2,534 per month. That's based on the median asking price on a national level, the asking price for people listing their houses for sale, and also the weekly rate for a mortgage rate for a 30-year fixed rate about 1 week ago. That $2,534 per month is roughly $300 less than April's all-time record high. And the reason why housing payments of would-be home buyers is going down is because prices are coming down, but actually more importantly, which is contributing mostly to this decrease down by about $300 per month, is due to the fact that rates have been coming down greatly as well, which I'll share with you guys in a little bit. But despite this decrease in your average monthly housing payment, many home buyers are still sitting on the sidelines. Some are hoping for rates will fall further once the Fed starts cutting interest rates in a few weeks, and others are waiting for clarity about the new NAR rules or the outcome of the presidential election. Something to keep in mind, I've been telling you guys here several times, but it's worth mentioning because Redfin's saying this right off the bat. The rates we're seeing today, the average 30-year fixed rates that we're seeing today, have already taken into account future expectations for future rate cuts by the Fed. So in other words, everyone's expecting that the Fed is going to start cutting interest rates in about, I think it's about 2 weeks from now, in mid-September. So because everyone's expecting that the Fed is going to cut interest rates, it doesn't mean that once they actually do cut rates, that mortgage rates decrease that same day. The rates we see today have already baked into account that the Fed is going to start cutting rates back in September this month. And Redfin actually touches on this here as well. It says mortgage rates may not come down much more than they already have. That's because markets have already priced in interest rate cuts from the Fed starting in September and going through 2025. Here's the main point though. If the cuts are smaller and slower than expected, rates would rise from what they are today. In contrast, if the Fed cuts rates faster than expected, I believe the street is forecasting for a 25 basis point rate decrease in mid-September this year. If the Fed, let's just say they cut rates by 75 basis points, that would cause mortgage rates to decrease greatly as well. So if the Fed cuts rates faster than expected, rates are likely to decrease further. If rates do fall substantially more than they already have, that could push up demand, competition, and of course, home prices as well. So speaking of that, let's talk about rates because according to Redfin here, it says weekly average mortgage rates have fallen to the lowest levels in about a year and a half. That's based on data from Freddie Mac. What I actually like looking at instead is the Mortgage News Daily. They look at daily rates for people with great credit because today, which again is September 5th, your average 30-year fixed rate is at 6.35%. Jumbo is at 6.5%. FHA and VA loans, you can get around 5.7%. Again, these are just average rates. You can get rates lower than this, but of course, rates higher than this as well. So looking at this chart, going back to approximately April of 2023 at 6.35%, excluding one single day in early August this year, when the average rate was at 6.34%, going back to, April 7th of 2023. So we basically have the lowest rates we've had going back to April 7th last year, with one exception, of course, that was in early August this year. On top of that, rates are actually much lower today than they are 1 year ago. So for example, 1 year ago, the average rate was at 7.21%. So therefore, rates have decreased by about 86 basis points from 12 months ago. Here's the kicker though, because even though rates have been coming down, we're not seeing a sharp increase in home buying demand. So for example, it says pending home sales fell by 8.4% year over year. That's a measure of home buyers getting their offers accepted. That decreased by 8.4%. That's the biggest year-over-year decrease in nearly a year. Some would-be home buyers are sitting on the sidelines because they're priced out of the housing market. waiting for the election, or to see how this plays out regarding the NAR settlement that was just enacted in mid-August this year. And by the way, if you guys want more information regarding how that's impacting our housing market, and of course, how that's impacting home buyers regarding that NAR settlement, I made separate videos regarding that, and I'll provide a link in the video description below for that. So anyways, let's go on and talk about some early signs here. It says there are some signals that prospective buyers are touring houses and prepping to purchase, even if they're not buying though. So application numbers are up by 3% week over week. I've been getting comments regarding how people have been seeing videos saying that application numbers are at the lowest level since 1995. But in fact, that's actually not true. I'll have some data share regarding that. So applications numbers rose by 3% compared to the previous week. That's based on data from the MBA. And Redfin's Homebuyer Demand Index, a measure of tours and other home buying services from Redfin agents, was up by 4% from 1 month ago, and also its highest level since approximately May this year. All right, let's talk about some leading indications of home buying demand to kind of give a glimpse of what's ahead regarding our housing market here. We already talked about rates. Let's talk about the MBA's purchase index. This is basically an index which measures the amount of people who are submitting applications to buy houses using loans. That increased from 1 week ago by 3%, but it decreased by 4% from 12 months ago. When I saw that article, which it gets posted every single Wednesday, every Wednesday morning from the MBA, I was kind of taking a step back because I don't remember when was the last time we saw a small decrease of 4%. We've been seeing decreases in the range of 15 to about 25% for quite some time. So here's what I did for you guys. I looked at the MBA's website, looking at all their articles going back to 2021 for all their weekly articles, I should say, regarding application numbers. Spent about half an hour doing this, but this is really, I saw that 4% decrease. It sounds like a small decline. So that 4% year-over-year decrease in applications, again, for people looking to buy houses using a loan, that's tied with the smallest decrease since the week ended November 19th, 2021. In other words, that's the smallest year-over-year decrease in nearly 3 years. So for comparison's sake, back in mid-July this year, it was down by 15% compared to mid-July of 2023. In early April this year, it was down by 23%. Look at this though. The end of May last year, it was down a whopping 31%, but actually it was worse in March last year, down a whopping 42% compared to early March of 2022. So key takeaway here, activity for people who are applying for loans to buy houses, I should say people applying for mortgages to buy houses, activity fell off a cliff in early 2022 through early 2023 due to a sharp increase in rates. Rates more than doubled in less than 6 months in 2022, which of course shocked our housing market. So we are recovering from that somewhat because we aren't seeing double-digit decreases of application numbers no more. And in fact, last week it only decreased by 4%. However, you guys know I like to say however, we're at very low levels, so we're basically have a small percentage decrease based on a already very small number. So think of it this way. We saw a huge decrease in application numbers, and right now we're basically at a low level. So we're seeing a 4% decrease based on a low level of application numbers. Unlike early 2023, we saw a sharp pullback in application numbers because we saw a sharp increase in application numbers back in early 2022, right? So we're not at the lowest levels of the year, but we are on par, keywords there, on par with levels we saw back in 1995. And of course, every housing market's different. This is based on a national survey from the MBA. One more thing I want to share regarding this, and I'm sharing this because I want you guys to be more informed, but I also want to have you guys have the ability to do your own research, right? If you watch a video or read an article about how application numbers are at the lowest levels in 40 years, then you can fact check them by actually going to the source of the data. So one of that sources that I actually use is actually from the MBA. Click on housing data right here. And then you can click on, where is it right here? Application numbers. So I'll provide a link in the video description below here. So the composite index is an index which measures the amount of applications for refis plus purchases. So I don't really focus on that because refinances and purchases are vastly different. The refi index, by the way, is not seasonally adjusted. So keep that in mind. You tend to see fluctuations based on seasonal trends. Instead, I actually look at their purchase index, which is seasonally adjusted. You can look at the 30-year fixed rate, or you can hide that just by clicking on that. And you can see over the past 1 year, the index right now is at 131.8, which is higher compared to the previous week, also higher compared to February as well as October last year. So we're not at a 12-month low, but we're at very low levels because look at this. This goes back all the way through the early 1990s. As you can see, the levels right now we have are not the lowest levels since 1995, but they are on par with levels we saw back then. So big picture, what I'm getting at here is that, we're not seeing this giant decrease of application numbers, but we are seeing a small decrease based on already a small number, if that makes sense. Anyways, moving on. Let's talk about their Redfin homebuyer demand index. That increased by 4% from 1 month ago, but is down by 7% year over year. Also, people searching for homes for sale on Google, that's up by 6% from a month ago, but unchanged from 12 months ago. All right, let's move on and talk about some key housing market data regarding home prices, inventory levels, pending home sales, the share of price shops, and of course, much, much more. Their weekly data goes back, by the way, through 2015, and it is subject to revision. They basically look at 400 plus US metros. And this article or a report covers the 4 weeks ended September 1st this year. So the median sale price, just under $390,000, hasn't really moved very much in a couple weeks now, but is $5,000 below the all-time record high that was set back in July this year. Asking prices rose by 5.3%. Sold prices rose by 3.9%. Meanwhile, your monthly housing payment at the weekly rate at 6.35%, which coincidentally is very close to the daily rate as of Thursday as well. That's the lowest levels since January, about $291 per month below the all-time record high that was set back in April this year. Redfin also tracks the 50 most populous metros as well, because of course, every housing market's different. So based on sold prices, there were 7 metros that decreased compared to 12 months ago. Actually looked at their article from 1 week ago, and there actually was 7 metros that were down as well. So unchanged compared to the previous week. The biggest decrease nationwide for the 50 biggest cities was Austin, Texas, down by 4.5. Then we have Fort Worth, Texas, down by 1.7. San Francisco down by 1.2. Tampa 1.1. San Antonio 1%. Oakland down by 0.9%. And Houston, Texas down by 0.3%. In contrast, Philadelphia saw the biggest gain, up by 11.9%. I mean, what a difference compared to Austin, down by 4.5. After that, we have Milwaukee, Nassau County, New York, up by 10.1. Providence, Rhode Island, up by 8.8, and Newark, New Jersey, up by 7.8%. So much of the Northeast and parts of the Midwest are experiencing the biggest increases in prices, whereas much of Florida as well as Texas are actually going down due to the difference in supply. So in Texas and Florida, we have more homes for sale right now compared to pre-COVID levels. In stark contrast, in the Northeast, for much of the Northeast, we have a lack of houses for sale, to say the least. Looking at Redfin's data center regarding the median sale price, right now, again, it's at $390,000, up by 4% year over year, lower than the peak that was around $396,000 that was set during the 4 weeks ended July 7th. So right now we're up by 4%. At this time last year, we're up by 3%. 2022, though, we're up by 7%. Look at 21, though. Look at this. Let me make sure I'm sharing the same week approximately. We were up approximately 14%. And back then, we're at 339,000. Now it has increased to 390,000 right now. All right, let's change gears slightly here and talk about pending home sales, new listings, and of course, housing inventory. So pending sales, a measure of contracts being signed between buyers and sellers. that decreased by 8.4% year over year. That's the biggest year-over-year decrease since October of 2023. Meanwhile, new supply hitting the market, new listings rose by 3.7%. Active listings or housing inventory rose by nearly 17%. However, though, if you guys want to see housing market crash, inventory is basically moving in the opposite direction here, because that increase of 16.6% is the smallest increase since April this year. Let's have a look at Redfin's data center regarding this. So pending sales fell by 8.4%. The previous week, we were down by 6.3%. Let me exclude 21 and 22. So we can just look at this year compared to last year. As you can see, pending sales were basically moving in line with last year's levels, but have been coming down for the past month or so. So for example, back in, when was this? The 4 weeks ended August 4th, we were down by 5.2. Now it has decreased to 8.4%. So basically what we're seeing right now is a seasonal decrease in contracts being signed, but right now we're at the lowest levels in at least the past 3 years during the same time frame. In regards to new supply in the market, let's take a look at that. So this is much different as well, because to start the year during the spring home buying season, we saw new listings up by up by about 9% to about 15% during the spring home buying season. But right now, at least for the past month or so, new listings have barely squeaked out a gain. In fact, right now we're up by 3.7%. Looking at, back in April, we're up by 14%. So we're still seeing a lack of new supply in the market. So even though we're seeing a small gain compared to 1 year ago. In regards to active listings, or the amount of houses for sale, basically moving in the opposite direction if you guys want to see a housing market crash. It has increased by 16.6%. We're actually very close to the peak back in 2022. But right now at 16.6%, this is actually the lowest year-over-year increase since all the way back until the 4 weeks ended April 7th this year, when at that time we saw a gain of 15.64%. When I exclude 21 and 2022, though, you really can see this sharp rise of inventory levels this year versus last year. We basically had a small run up of inventory. So this year, inventory is basically skyrocketing. Let's have a look at how this compares to 2022, though. So 22, we saw a big increase of inventory as well, especially in the early home buying season, early spring home buying season. But the rate of change was actually much sharper 2 years ago compared to last year. So for example, starting in basically May, we kind of had a slowdown in the run up of inventory levels, but much different compared to 2022, where inventory was basically skyrocketing through July that year. All right, going back to Redfin's report, let's talk about pending sales for the 50 biggest metros. There was 16 metros that saw gains of contracts being signed. In contrast, this means that it decreased in 34 of the 50 biggest metros. In fact, the biggest decline, surprisingly here, is Miami, Florida, down by 17.4%, West Palm Beach, Florida, down by 17%, Fort Lauderdale, down by nearly 17%. Then we have Atlanta and Houston. In contrast, the biggest gains of pending sales, San Francisco up by 7.1%, Boston 6%. Then we have San Jose, Los Angeles, and Riverside. So interesting there that 1, 2, 3, 4, 5, that 4 out of the top 5 metros that had the biggest gains of contracts being signed are actually located in California. In regards to new supply in the market, the biggest increase is San Diego up by 17.4%. Then we have Las Vegas, Phoenix, Anaheim, and Houston. In contrast, we're seeing a lack of new supply in the market in Atlanta, San Antonio, Newark, New Jersey, Austin, Texas, and Chicago. In regards to the month supply, we're at 3.6 months. That's an increase of 0.8 months from 1 month ago, which means that the month supply was around 2.8 months back at the same time frame last year. But this is at least a 3-year high right now. In regards to days in the market, how fast or how slow houses are selling, Days in market's at 36 days. This is at least a 3-year high as well. But we're not seeing this sharp run up of days in the market like we saw 2 years ago. But we are experiencing, gains compared to previous years though. Lastly, I want to share, or actually 2 more things I want to share with you guys. The share price drops actually decrease. Now we're at 6.6%. The all-time record high, I believe, was set about 2 weeks ago at around 6.9%. Having said that though, we're at least a 3-year high during the same time frame. And of course, the sale price to final list price received is at 99.1%, which means that houses that did sell over the previous 4 weeks, they sold for 0.9 percentage points less than the seller's final list price. That, by the way, is at least a 3-year low as well. So please comment below your biggest takeaways from today's video. If you guys got any value, then please hit the like button. I greatly appreciate you. Also consider subscribing as well. Have an amazing day and look forward to seeing you on the next video.